Well, let's learn a little bit about numbers. This stuff is boring, you guys, but if you don't do this, you will fail. You'll be in that, well, they say 50%. I've heard some of them say 70% in 5 years. And that's 5 years wasted, you know? I mean, you might even have debt from the business and everything. I mean, it could be 10 years, 12 years before you work your way out. So listen to this stuff. It's boring. I get that. I'm not trying to entertain you. I'm trying to teach you. Anyway, let's do a little bit about numbers. Gross sales. Gross sales is how much you bring in. In other words, you sell something for $100, or your tech guy does something to a furnace and it's $800. That's your gross sales. Cost of goods is whatever it costs you to perform the service or the cost of the product. In most cases, this would be more of a retail thing, but still, cost of goods. If you take gross sales minus cost of goods, you have your gross profit. Now, can you spend that? No, that's your gross profit. After gross profit, you have to take off your monthly expenses. Once you deduct that, you end up with net profit. Now, you can go over this anytime by hitting the replay on this, and you'll learn something. You got to know these facts, because if a banker is quizzing you on what your gross profit is and you're giving him gross sales, you know, he's going to know you don't know your numbers, and bankers deal with numbers. All right. Here's an overhead, idea of an overhead. You got your rent, your wages, your FICA tax, which is a tax for Social Security and Medicare that you have to deduct from the employee share of their wages. That you take that off. Utilities, $1,500. Insurance, $2,000. Miscellaneous, $2,500. Now, miscellaneous obviously is anything that isn't categorized like this. When you actually are in business, you'll have 15 items here. And then, of course, the owner, for yourself, you got to make $5,000. I mean, I don't know if you have to make $5,000, but let's pretend like you need $5,000 to cut it at home. Okay, your total expenditures are $21,535. Now, so in a month, your sales are $64,000. Your cost of goods is $36,000. You end up with a gross profit of $28,000. Sounds pretty good, right? Expenses are $21,535. So you end up with $6,465. Plus, you had $5,000 in this $21,000, so you've got $11,465 that you made that month. That sounds really good, doesn't it? Now let's go to the next step here. And we'll put this up. Now this is where Uncle Sam steps in, okay? And you'll see what real taxation is. So at $11,465, you're going to have to deduct 15.3% for self-employment tax. That's your Social Security. You have to pay both sides, okay? So 15.3, which is $1,753 that you'll owe on that, and that's due every month. You know, that's you make your Fed deposits monthly or quarterly. Depends on how big your business is. Your accountant will give you the information on that. And the next thing would be like Fed. Let's say you're at 15% for regular income tax. Okay, 15% would be $1,719. And then you have state tax. Now some places like Texas doesn't have a state tax. Florida doesn't have a state tax. Missouri has a 6%, and it's pretty much 6% of the gross amount, you know, roughly. You know, I just went ahead and put 573 down here. Being your state would be different. I just took a crack at it. Okay, so after all that's deducted from your $11,465, you have $7,420. Now, can you spend that? Well, as long as you don't buy something and put money down or add inventory, So like if you're adding inventories, $1,000 out of the inventory, that's got to come out of profits. Okay, so, and let's say here you put $1,000 on a truck. You know, that has to come from somewhere, okay? So it comes out of your profits for the month. So 7420 minus 1,000 minus 1,000. Maybe you pay, I have it here as paying $1,000 on a loan. Okay, doesn't make any difference. It's a expense. It's an expense. You can't write it off. It's just basically cash flow problem. Yeah, most people don't know that that's got to come from someplace. You can't spend the 7420. You got to deduct these two, and the 5,420 would be more or less what you have to actually spend if you're tracking your numbers. And you got to do your numbers no less than once a week, and probably at the end of the week. Stay late on Friday night, you know. Order a pizza, and the two of you sit there and make sure you're not spending what you don't have. So basically, you went from 11,465 to at least 7,420. You won't have this kind of stuff every month, but we had a big problem. We kept adding inventory. There was our third year, I think we made 28,000. Okay, I mean, it was nothing. Of course, this is back 73, 74, you know, made 28 or 30,000, but we added 20,000 in inventory. Well, that means 30,000 is what we made the whole dang year, and then we deduct 20,000 inventory. We only had 10,000 to spend. Well, obviously we spent more than that, and we had to go out and try to get a loan or do whatever we could. Our cash flow was out of focus, you know, out of balance. Cash flow is different than gross profit or net profit. They're two different things. You can be making a lot of money, but if you're spending more than you're making on inventories and stuff like that, your cash flow starts dipping. You're making money. You're going up this way making money, but your cash flow is getting worse. There's a lot of companies that go out of business because they can't get a loan, and they're actually profitable, you know. But their cash flow is out of whack because they're either adding more inventory or investing in capital equipment, you know, that type of thing, and it takes money, you know. So when you're doing these numbers, you know, we'll go over this again, and you can always obviously look at it 100 times if you want. Heck, at least look at it once. Nobody's even clicking through. People are getting off it. These are like 10-minute blurbs that I'm putting up here. Because I know it's kind of dry stuff, you know, but I'm trying to really teach you something. I'm not telling you. I know some guys say you got to have spirit, you got to have spunk, you got to blah, 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 and all that stuff. No, you got to know your numbers, because if you don't know your numbers and you got all these qualities, you know, it doesn't do any good at all, because you're going to go out of business, and when the day you go out of business, you'll have all those same qualities, but you're just going to have to go work for somebody else and pay off your debt. You know, you're still going to have money that you owe even after you close the company. Some people are dragging debt around for 5, 6, 7, sometimes even 10 years from a business they closed because they weren't watching their numbers, you know. You got to don't look at your checkbook. That's called checkbook accounting. Oh, we got a check for 10,000. Hey, look, we got 18,000 in the bank. We never had more. And then you forget you had to pay your insurance yet, and wages were due the next week. And you know, don't look at the checkbook. Checkbook is only used for writing checks, and that's the only thing you should count on. You know, of course, your accountant, if you do your own accounting, it's one thing, but otherwise they'll post your books out of the checkbook. So, you know, watch what you're doing on stuff like that. Probably ought to get a payroll service too, because you're going to get in tax trouble if you're not watching your deductions that you're deducting from employees and all. Make sure you get proper help if you're not capable. If you have a little accounting experience, it's one thing, but other than that, you got to pay those employment taxes all the time. That's the first thing. You know, you got to pay your mortgage, your rent, you got to pay your house thing, your house payment, but you've got to make sure all these things are clear, okay? So, all that being said, I'll see you the next time. Coming up, in fact, I'm going to do another video pretty quick here. And but start watching them all the way through, and start with season 1 if you can, or episode 1, episode 2, episode 3. Don't just listen to nonsense character, you know. So that pretty much takes care of it for now, and thank you.